This is the Friday, April 3, 2020 version of the Market Plus segment. We have a four-panel of experts through the power of technology. We thank you for your patience as you navigate with this. We know the word is very important, and I'm going to introduce our panel to you now. We're going to start with Naomi Bloom. She's Senior Market Advisor for Total Farm Marketing. Ted Seifert, who is the Chief Market Strategist for Zaner Ag Hedge. Angie Setzer, Vice President for Grains for Citizens Elevator. And Don Rose, Founder and President of U.S. Commodities. Thank you, you four. I appreciate it. They can see me to the right. It's like they're sitting where they normally do. But we have some great questions that have come in via Twitter, Facebook, and Instagram this week. We're going to start with Benji in Wisconsin. He's asking, after setting new lows, Naomi, is there any good time to buy a call in the corn market? And is there a contract that you like better?
Yeah, I would say this. I'm a little bit more defensive yet on corn. I do feel that the nearby futures prices have a little lower to work. It wouldn't surprise me if we get closer to $3, but then that is tremendous support on charts. At that time, I'll look to be lifting hedges and starting to implement July calls or December calls. It depends on if we're looking for a short-term bounce or the bigger picture, but I would get those open orders working now. So like, for example, if you were to buy a July 310 call, I bet you could put an open order now to buy one for about 18, maybe 15 cents if you get lucky, and then there'll be an at-the-money call, but you have to wait for that market price to drop. But you can't get filled if you don't have the order working. And then by the time we see an actual bottoming signal, the move will already pass. So get the open orders working now.
All right, Ted. Mike in North Dakota is asking via Twitter. He says, May corn broke $3.30 today. How likely is it to see a sub $3 handle on corn before we start adding some production risk to new crop corn prices?
Yeah, it's absolutely possible to see sub $3 corn. Again, we talked about ethanol at length, and if this shutdown occurs till August or beyond, it's a very real possibility if we don't have exports to come pick us back up. You know, the idea at the moment is that we're going to lose 200 to 250 million bushel of corn demand to ethanol. But that number can go to 600 to 800 million. If that happens, we'll see sub $3 corn. Now, that being said, I don't feel like that's the situation that we have right now. I think a lot of us are going to start going back to work maybe next month, even if we are still shut down. I'm in that boat. But, you know, we'll see. I think you do want to go back to the question that Naomi just answered. I'm a fan of courage calls. Usually, I'm not as much so right now. But if you are forced to be selling corn at these prices, you want to have more exposure to the upside, because what Don was saying at the end of the program, the regular program, when this turns, it's going to turn fast and furious. So re-ownership, I'm all for it. Protection to the downside, buying puts is too expensive for me. Either sell cash, sell futures, whatever. But again, find a way to reopen that upside.
All right. Angie, this is a question you knew was coming, and it still doesn't make it any easier. This one comes from Phil in Ontario, in Dresden, Ontario, and he's asking about the basis and the border. And his specific question is, as COVID-19 moves towards a peak, will borders thicken and grain movement be limited globally, possibly increasing cash grain values?
I think that's the potential. I think the hardest part for us, I mean, it obviously Phil's in a whole different world there, because their currency has gotten incredibly cheap. They're seeing a significant amount of export demand kind of pick up in their neck of the woods, both for their wheat and for their corn. They're in Ontario. So, I mean, it's a different story for us here in the U.S. because of the concern over our domestic demand. We need exports to really be strong in order to help us feel a little bit better about where we're moving. So obviously the concern remains. We're still seeing that back up at ports in Argentina. Bolsonaro said today that they are no longer quarantining anywhere in Brazil, basically. So they're trying to kind of eliminate that concern there. You know, I had the opportunity to make a pretty decent cash corn sale before everything fell apart here going into Ontario with some bushels. I didn't do it because I just didn't have the confidence that we wouldn't potentially see a shutdown and I would be stuck trying to cover Ontario corn into Ontario. So I think that'll kind of cause some issues. We really just have to see how the currency reflects, what we see happen with the currency there. But I think really we need the exports. So the last thing we want to see is corn to get back up and not able to leave the country here in the U.S.
Don, earlier we were talking about weather issues. You and I here in Iowa, we had the rain to the freezing rain. Just to the west of us, we had snow. I assume, Naomi, there's always snow in Wisconsin, right? No, I'm just kidding. I know it's not that way. Don, there's a weather question here. This one, now I've already lost it. Craig in Minnesota is asking, and I know they had to deal with some snow this week. Craig in Minnesota, he's asking, could we see a weather-related spring rally in either corn or soybeans?
Well, I think right now the weather issue that we have that's really on the radar is in the Black Sea. Remember, Russia is the largest wheat exporter in the world. They're dry there. Ukraine raises corn that competes in the world market. They're dry, so watch the Black Sea area. But as far as answering the question for the U.S., the last half of April looks like it's going to be a bit wetter. And remember, last year we were on our heels, under pressure, actually lower levels than this on soybeans, close on corn. And May 13th, we hit a bottom and started to rally on weather. So weather, I always say, is the dominant issue in any of these markets, and I think it will be again this year eventually.
Well, we know weather caused acres to change reluctantly at the end because everybody tried to plant 2 or 3 different times. I guess I'll open this up to an all-play question. Did anybody, or do you know of anyone that's actually legitimately going to switch acres following the report or following just the economics of what's going on? Anybody?
Yes.
Almost everybody I've talked to.
Really,
in the
all
last
4 of
2
you
weeks,
said that. Okay.
Yep.
Ted, what do you got?
Thing.
Almost everybody I've talked to in the last 2 weeks is making the shift more towards soybean acres. A few reasons why. I mean, look, I've been doing the math since we got the acreage prospective planted numbers, and I'm just using 95 million acres of corn and 85 million acres of soybeans. The way I pencil out demand and everything like that, I'm not going to go through all my numbers here, but ending stocks for corn next year, my first blush is 3.290 billion bushel carryover. My ending stocks for soybeans is a 510 million bushel carryover. Which one is more friendly? Which has more opportunity? I think the reality is that we're not planting enough soybean acres. We're planting way too many corn acres. I think a lot of guys, the Savvy guys, know that and are making changes.
Naomi, I think you've had the same discussion.
Same discussion. Awesome points, Ted. I'll add to it. It was a very, very wet fall and winter. So the fall field work didn't get done. So from the standpoint of, people had committing to corn acres because of what they had on their fields as far as anhydrous, not an issue. There's a lot of flexibility out there yet. So I think we can see some changes absolutely in the coming weeks and in the month.
Angie, help me out on field work there in Michigan. Are you like everybody else where, like what Naomi just said, fall field work didn't get done, it's been wet this spring? Same story for you?
Yeah, I mean, it's been a struggle for us. I feel like we've been a bit drier up until the 2 inches of rain that we got last weekend. That kind of threw us off a little bit. We were able to get a lot of the nitrogen spread on the wheat here, so that's been nice to watch that green up. What's put in does look okay, but we're probably a week, 2 weeks off from even trying to get spring prep for the most part, and there's some rain in the forecast. So I do think it plays a role, but I mean, you've got to get to Mother's Day and see significant delays, I think, before we really get too worried about what weather will do as a whole.
I'm pretty sure Mother's Day is next year, right? I mean, if March is as long as it's been, it just seems like it's forever away. Don, I want to ask you one question here. Mitch in Hull, Iowa, up in the northwest part of the state, he was asking about, for farmers with 2019 corn in the bin, there are people that are stuck in that situation. What strategy do you suggest for them getting that marketed before fall? I mean, you're talking about that coil of when things take off, it could take off. Do you hold for that, or have we already missed the boat?
Well, I was going to remind you, we are going to get a corn harvest update out of North Dakota next week. So going back to planning. But, I think when you look at it from a farmer, once you get so low on price, 220 is the national loan level on corn. And sometimes you look at that. Basis levels, probably behind on the opportunities. So you're probably down to some weather type of situation going forward.
All right, you all were fantastic answering my questions and the questions of viewers. At the end of the main program, we kind of had an optimistic question. I'm going to have one more optimistic question from Roger. He wants to know, anybody see a glimmer of light at the end of the tunnel, and where is the end of that tunnel? Naomi.
I absolutely think there is going to be a glimmer because low prices cure low prices, and that's always been the theme of the markets, and since the past history of existence from the standpoint of commodity trading. So as soon as these prices get low, demand will pick up from the export front. China is getting everything that they want with these low prices.
That's a deal, yeah. Absolutely,
And
it
so
did.
seasonals are going to kick in and the funds are going to exit short positions because they're in it to make money. So you're going to see the market price rally higher. We don't know what the fundamental is going to be to spur that action, but absolutely, I would say my best guess would be early to mid-May, I think is when we
Okay.
finally start to see things turn around.
Ted, what do you see as a bright light?
Yeah, I mean, there's a tremendous amount of upside potential when we get past this coronavirus deal and we get back to work. You look at things like cattle, hogs. I'd say soybeans have $2 upside potential once we get past this. But until we do, we're kind of stuck in the mud here, and we are in a culture of fear. We got to get past that. We have to have hope. When hope comes back, prices will too.
Angie, was today's group therapy helpful for you?
Oh, I feel so much better. I'm yes.
Very good point, Angie. That's sometimes just talking about it with others is extremely important. And by the way, Angie had brought up a point earlier this week on Twitter. The mental health side of this, if you do need some help, please talk to somebody that you trust, or just reach out to someone and just have a conversation and know that you are not in all of this alone. My thanks to Angie Setzer, Naomi Bloom, Ted Seifert, and Don Rose for the insight. We appreciate it for joining us on this special program. Next week, we will explore how experts are pushing an old grid system in a new direction, and Tom Fitzenmeyer will join us to break down the commodity markets. Until then, thank you so very much for watching, listening, or reading. I'm Paul Yeager. Have a great week.